Hi there. Thank you for viewing this week's video. As usual, let's take a look at the indices and check out how they have performed and also the outlook for the upcoming week. Now, first of all, let's do a quick discussion on the market performance last week. The US market began the week with yet another positive movement, especially after Fed confirmed the interest rate hike, which was so-called priced in by the market. But the bond yield jumped up substantially on Thursday's trade, resulting in another huge sell-off in the tech sector. Another down week for the US market. Going to the Asian market, the STI ended the week with an emphatic sell-off as the index broke one of its key supports. The reason why I call it a key, because breaking the support can lead to downtrend. Hang Seng had done badly as well, closing the week with a strong gap down and continuous selling to end with a black candle. Overall, the Asian market had a bad week. Now let's look at the performance chart over here to see how on the weekly basis the indices performed. Now on the chart itself, you can see in fact all of them it's in below the 0% level, as you can see the scale over here. Okay, with the Dow and S&P 500 slightly lower than 0%, not so bad if you were to consider throughout the whole week, but then it's still down. The Nasdaq is down by roughly 1.5%. STI 2%. Hang Seng is the so-called weakest performer with the more than 5% down. Okay, so without further ado, let's take a look at the Dow chart over here. So this week I'm going to so-called present in this format where I just want you to have an overview of how the US market performed. On my left-hand side over here, this is the Nasdaq Composite. Then we have the Nasdaq 100. Now, what are the difference? I believe these are the two indices that represent Nasdaq, but Nasdaq Composite has more stocks in it, while Nasdaq 100 has 100 stocks in it. But overall, if you look at the charts, they move the same. So either way will do. So I prefer to use Nasdaq Composite because all the major investing website in the US, they cover Nasdaq Composite. So you can see here overall the 4 charts. So on my right hand side, S&P 500 and then Dow. So let's talk about the US market first. The week started with a sell-off. If you look at the S&P 500 over here and Dow over here, in fact, during the intraday, it was a black candle. But a strong fight back helped the S&P 500 and the Dow to close nicely as a hammer, while we can see the Nasdaq close as a white candle. In fact, the week started with Nasdaq just edged down where the market is buying those so-called super counters at the so-called low price. Then it is in fact a positive sign, or it was a positive sign as the market signal for potential rebound, with the hammer especially on S&P 500 and the Dow. The positive rebound came in on Wednesday night as the Fed confirms the interest rate hike. The rebound was of a magnitude that led me to believe there might be a change in trend. Why? Because if it's a downtrend, definitely we'll see lower high, lower low. And the rebound magnitude is usually very small in the sense that it is less than 50% of its previous sell-off. So when I say previous sell-off, I would take this as a fresh sell-off as the Nasdaq broke its support. The S&P 500 sell-off here And in fact, the market covers the selling of this particular candle. Okay, it actually also tested the resistance, which can suggest a potential change in trend. However, of course, it is still a man-made event where suddenly the bigger players dump the bond, which resulted in the bond yield to spike up above 3%. And that led to the sell-off in the tech counters, as you can see over here. They push it back to support level immediately. So S&P 500 follows and Dow follows as well. And then what we see is that the Dow clinging on to its support level, same as S&P 500, but the poor old Nasdaq broke its support level. Okay, so let's take a look at the bigger chart over here, single window, then we look at the Dow first, okay? So what we see here is that the Dow ended the week with a hammer pattern, and this actually gives us a glimmer of hope where the index, if it can confirm this hammer and retest this resistance, then there might be a potential change in trend, because back to basic, we see the break of downtrend as the pattern doesn't continue with lower low and lower high. So we still have a chance next week. So let's look out for the support 32603 and then the resistance at around here. Let me just probably drag it to a better level, 34116. Okay. Then moving on to S&P 500, we have it at its support level over here. Okay, and it tested its resistance over here, and if it can close above 4168 and retest this resistance, change of trend is potential. It could happen. It could still happen as it happened in March before, and hopefully May we can see some recovery. Of course, the inflation data will be the key that the market will be looking for indications for recovery. If the inflation data continue to scale higher, I would believe that the market will continue its sell-off because the US official is still maintaining that the economy is doing well. You know, interest rate doesn't hurt the economy. It's not going to bring it to recession. But the market is thinking otherwise. So I don't know why are they still living in denial. But anyway, let's look at the poor old Nasdaq. So the Nasdaq has been a downtrend. Even the retest of the resistance doesn't help because it breaks its support. So resistance holds, support breaks, is still a bearish sign, and the next key support will be 10823. Okay, and well, of course, if the Nasdaq can have some rebound, or Dow and S&P 500 can help to drag this embedded index back to where it's supposed to be. So it must actually close above around 12380. All right, so we shall see what could be happening next week. So again, next week will be a key week to look forward to as the inflation data is been released. Next, let's look at the Asian market. We have the STI. Well, the STI last week, the short week of trading displayed two key signs, and this observation is important. Why? Because first we start to see resistance holds firmly, and then support breaks. So like I say, in a bear market, resistance hold, support breaks, and then this could lead to a sell-off or continuous downward movement where it may test this potential support at 3258 thereabouts. So would it happen? Of course, on the others end, if the US market can recover, there might be a chance for the index to fill up this gap. And of course, the index must fill up this gap in order to return to its bullishness. So we shall see. So I will maintain bearish for now as what the chart tells me. But then if there's any miracle that comes in, while I may be proven wrong, and I hope that I'm wrong, then we have the poor old Hang Seng. So same as poor old Nasdaq. So we have the Hang Seng got dumped down at the end of the week. After 2 days of consolidation, it actually closed the week significantly lower, and it's another 5% down. And what do we see here is that the support level at 19663 could be tested, as the candle suggests there might be more selling. So we will still look out for more signs going forward, especially if the index were to break 19663, the support here at 18212 may be tested, to make some joke, right? Unfortunately, the Chinese official this time around did not come out on Friday to support the market. They usually like to support the market on Friday, as of like this white candle. They came out and then say that, oh, they're going to have some more friendly, business-friendly policy. But this time around, they did not come out. So, well, bearish as it is, we shall see what happens next week. Now, wrapping up over here, we are looking at a very bearish market so far. And then what do we see is that the US market fails to surprise as they continue to close lower week by week. And of course, next week, the core CPI level or CPI data will be released. So will the market get a surprise? It will be the main driver of the fate of the US market. And of course, I believe it will be the Asian market as well. So because the Asian market doesn't look good and may continue to go lower, especially if the US market continue its sell-off. But to think it positively about the market, the US market may be bottoming soon, right? If such a heavy sell-off continues. With Nasdaq already down by about 22 to 25% year to date. Let's zoom with, let's relate this with the performance chart again. You can see the performance chart. Let's go to the beginning of the nightmare 2022. So we can see the Nasdaq already down roughly about 22%. The Dow is about 10%. The S&P 500 is about 14%. We can probably see some bottoming action when Nasdaq hit about 30 to 35%, which can be accomplished in 2 to 3 trading sessions. And S&P 500 going to 20%, maybe 100 points dropped for a few days. And then Dow hit 30% with 1,000 points drop almost every day, which it has been doing for the week. Last 2 weeks, it had one day of drop at least 1,000 points. So by then, most of the so-called superpower in the US market may be already down by around 50% or more. So then people will be starting to pick up all these so-called growing stocks. Why? Because the results for some of these stocks are in fact good. They're still growing. It's just that some of them may not grow as much as the market like, but they're still growing. So there's nothing negative about it. The growth can still return, you see. So what happened is that historically, like I mentioned last week, in 2008, the sell-off was the worst with a 60% drop from most of the major indices because of the bubble burst of subprime. This was a collapse of the economy, but now there isn't any collapse. Maybe people are just selling off in advance. So in a usual correction, probably 30% is the max, 30 to 35%. So let's see whether this time out will be the same as well. Okay, so thank you for viewing this video. I'll see you again. Have a good week ahead. Goodbye.